Is this a great investment opportunity in Quincy, Massachusetts? It's for building wealth with a 3-unit property. That's what I'm going to share today. Is this worth it? Be right back. Allow me to explain this 3-unit property in Quincy. Is it a great investment or not? First of all, we're going to go through the numbers with all 3 units being rented. Number 1, Quincy's a strong rental market. It's known for its thriving rental market, convenient location next to Boston, excellent transportation. The demand for rental properties is excellent, and this translates to a steady stream of potential clients, ensuring a reliable rental income. Number 2, cash flow potential. This is the number 1 thing about building wealth. Does this have the advantages of cash flow? Well, 3 units is much better for cash flow because if one is a little bit empty for a month or 2, you're losing less money. All 3 under one roof, renting out all 3, you'll enjoy 3 streams of income. This additional income can be used to cover mortgage payments, property management fees, and you're going to manage it yourself, especially starting out, and even generate surplus for further investments. These are the things you're looking for. Does this 3-unit property pan out if you bought it today? Appreciation and equity. Quincy has experienced notable property value increases over the last few years. This upward trend is projected to continue. As the property value increases, so does your net worth. And when it's time to cash out, that's when it will make a big difference. Number 4, diversification and risk. Okay, having multiple units reduces your risk. If you had 2 units and they each paid $4,000 a month and one was empty, that could screw you. 3 units, much better. Even if one is vacant, it's a temporary thing. The other 2 can be a buffer. And number 5, tax benefits. You'll have deductions such as mortgage interest, property taxes, repairs, maintenance costs, among others. Utilities like water. These deductions can help reduce your taxable income. You may bring in $40,000 a year, but you get to write off a big chunk of that. Potential for house hacking, meaning, if there's space, you could make a 4th unit. You could condoize it. These are all things you can do in the future if you own a property like that. It allows you to build wealth. So when you own something like this, say you keep it for 5 or 10 years, you can sell it hopefully at a profit, take that cash and invest in your next property or 2 properties. Okay, I'm going to go kind of quick here. Okay, here are numbers. The left side is income for those 3 units at the present rate, what people are paying. This side is if you raise the rent to market rent. The total income now is $37.50. The rents come to $45,000. Minus 1 month for vacancy loss. $1,200, $100 a month for snow removal and gardening, cutting the grass. Here's your income, $44,850. Expenses, they're going to be the same here. Property taxes at the new purchase price, property insurance, maintenance and repairs, utilities, which is basically water, and the expenditures reserve. If you need a new roof or you have a flood or one of the furnaces goes out, you need some money, you need some cash so you can get it fixed right away. That's it. And it's divided by 12 like everything here. So per year, you're going to need $17,600 in the bank. Your net operating income, so all those rents minus the expenses, but that means it covers taxes and insurance too. $27,250. The cap rate is pretty low. And here's your mortgage payment. So if I took out the expenses and income, you are still going to have to come up with $27,000 a year. And so this is not a good purchase price, $949, unless you decided you just want to park a lot of cash. But I would say this is overpriced. Now let's go to, if we did market rent. You might even do higher than this, but there is also the importance of driving around the neighborhood. There's a brand new building, probably has higher rents. That's on the same street, Beale Street. So $1,850 for the 2-bedroom, you might get $2,000. $1,500 for each 1-bedroom. You might get more, but I'm not about to do deep research right now. Rents come to $58,000 compared to $45,000. $1,500 for 1 empty unit, 1 month. Maintenance $1,200. Expenses the same. So your expenses are $17,600. So if I take this income minus these expenses, you have $40,000 still coming in. Here's your mortgage payment for the year, minus $40,000 for the year. You still have to pay this. Like I say, if you want to park cash, and this is a cash offer, that's one thing. If you want to pay less for the house, I gotta fix my spelling there, then would sit down and do a calculation. I would say this 3-unit building is overpriced and it's got low rent. So it's a little bit of a headache for whoever buys it. I hope this overview has provided you with a clear understanding of 3-unit building in Quincy. What are all the benefits and when you should pass and when you should negotiate. So thanks for watching. I will be doing another one next week. I will see you next Wednesday on my YouTube channel. Thanks for watching.